Hello, everyone. Welcome to Let's Talk Markets Live on this beautiful May 28th. Happy to be joined by Sean Smith at Denim. Sean, thanks so much for jumping on the program.
Hey Dave, thanks for having me. Pumped to be here.
Sure thing. All right. So while we're waiting, sometimes it takes time for people to join the live stream. So, you're at least adjacent to trucking. You live in Massachusetts. So, who are the worst drivers? Massachusetts, Maryland, or Ontario? Or maybe Quebec, but let's Canadian. We'll call it Canadian.
I think the Massachusetts driving style is well documented. Offensive driving. It is not defensive driving, which is I think what they teach you in school. It is really the most offensive.
Well, look, I'm from Jersey, so offensive driving I know. But let me give you an example.
Offensive or offensive, either one applies.
We pride ourselves in both. But okay, so when I lived in Massachusetts, we didn't talk about this before the show. I lived there for 7 years. And my wife's roommate was from Massachusetts, and she would explain how she changed lanes. And she's like, I don't use a blinker. I don't even look. I just change. And then it's up to them to get out of the way.
Yeah, we went to the same driver's ed. Yeah.
Amazing. I'll tell you this. I had really thought, Massachusetts is bad. I really thought Maryland were the worst drivers until I got to Canada. And I got to tell you, these Canadians, they just do not know what they're doing. And like Massachusetts, they're like aggressively bad. But in Canada, they're just bad and they don't know where the gas pedal is. And it's infuriating.
When I was in Canada, the thing that I spent quite a bit of time in Toronto, and people like wait for the walk sign there. Like there's no jaywalking. That was
very weird, right? Yeah.
That was the strangest thing of all time. I'm darting across streets. I've got like my Canadian colleagues who are like patiently and politely waiting on the other side of the road. I don't have time for this, Like what?
I'm from Jersey. I lived in New York. Like I cross the street. There's no one coming across the street.
It's similar to changing lanes. Come on. I'm going out there. That's
okay. All right. Moving on to why we're here. The last several months have been dominated by headlines about tariffs, what they mean for the economy, the markets, businesses, for everyday Americans and people around the world. And in a lot of ways, the freight industry is ground zero for observing these impacts. And so while consumers can feel a lag between policy and price fluctuation, those working in the supply chain business tend to feel the impact most immediately. And so that's why we're thrilled to have Sean Smith here. Sean's the VP of Product and Client Services for Denim. And I never even heard of this before, meeting you guys and learning more about your company, but there's this thing called freight factoring solutions. And, you're working to reshape the freight industry with innovative technology. I'm not going to try and explain what you do. I'd love to have you explain it and talk to the audience about why it's important and what it means for the economy and public companies.
Totally. So if you go to your local Dunkin' or your local convenience store and buy a coffee or buy a candy bar, you throw your credit card down or you give them cash, and that transaction is complete and money is made. And I'm sure as many folks in your audience know, in the world of B2B, it is very different. We have cash conversion cycles, we have AP and AR, and a part of running a business, especially in the supply chain, is you need to be able to walk that tightrope between the cost of services, right, and when you're going to get paid and how to make that difference up. So that working capital gap is a really big problem in freight. Carriers, trucking companies need fuel to go from point A to point B, right? And so they cannot wait 30 days to get paid. They want to get paid today, right? And a freight broker who is maintaining the relationship with the shipper, they're helping coordinate the movement of the product, the movement of the cargo. They are a very cash-intensive business because they need to pay the carriers on day 2 or day 1, and then they need to sit for 45 days, 30 days, 60 days, 90 days for when their customers are going to pay. And while they do that, they are consuming this cash, and they're also generating invoices. They're sending out checks. They're trying to figure out reporting. They're entering stuff into their QuickBooks, right? And it doesn't make a lot of sense, right, for a freight broker to do all that while making 15% on $1,500 a shipment, right? And so we exist to help close that gap for freight brokers and for fleets. So if you're a trucking company or a freight broker and you're moving, a load of potatoes, right, from Idaho to Boston or to Maryland, we help generate that invoice. We'll fill the working capital gap. We'll perform the collections for you. We'll send out the payments. We'll provide you with the reporting, the visibility, everything kind of in between, and we'll take a cut when the money comes in, and that's our business.
Fascinating. Okay, so how did you end up at Denim, and what is it that you do there?
Yeah, so I joined Denim 4 years in August, which is terrifying. In startup years, I'm sure many of you know
that's a lifetime.
Decades. Yeah,
that's decades. How long it took me to go gray. So
yeah, right. Well, I'm right behind you. Every barbershop visit is like a little more terrifying each time. I joined Denim. This is my second startup. So the startup I did before this was an Uber for dump trucks. And so we went across the United States, 40 metro areas, launching mini marketplaces. So like a dump truck will only drive in like a 25-mile radius, and they'll try and do 5 or 6 turns a day on stone or asphalt or soil or sand or whatever. And so we launched these marketplaces. The marketplaces were great. People like to meet new people, matchmaking, those businesses are all the rage, right? But we had a tough time with disintermediation. And once you meet a trucker for the first time, okay, great, now he's on my list, but see you later, right? And so that was a difficult strategic challenge for us. And we ended up solving it with payments and solving the working capital problem for quarry operators and contractors with the trucking companies that they run with. And so that working capital problem helped us keep business on the platform and help people run on our software and everything in between. And so when we sold the business during COVID, before I joined Denim, we sort of caught this little flame, right? Of like, oh shit, like this is the answer for us, right? And so when the business closed, or when the transaction closed, and it's not as fun anymore after you get acquired, right? So you got to go find something else to do. And so for me, I was like, I want a bigger market to solve this very present problem. And Denim, at the time, just closed the Series A a few weeks earlier, I think. And so they were kind of getting ready to grow, and join them then.
So that's pretty interesting. So you have your startup, and you get acquired right in the beginning of COVID, which is impressive and fascinating timing. And then now you're jumping into this, into this company that, in the midst of like some of the most crazy disruptions in supply chains in history. Yeah,
it was amazing.
Whoa.
Yeah,
what was that like? Tell us about that. Wow,
it was amazing. It was amazing to raise money during that period. That the founders were able to close an A round during that period. Grew 5x that year. I want to say grew 3x the year after. Obviously, starting from a really small base, right? So I think your listeners probably all have that in mind, right? But like, it was amazing. It was also peak supply chain growth. I want to say truckloads were like $2,800 a load or something compared to where they are now, like $1,500. So like truckers were living rich, right? And a ton of money was going into the space. The conferences were like overflowing with people. The events were like ridiculous. And it was, a lot of really, really interesting things happened in trucking during that time period. Like, we enjoyed an NRR that was like, we're obviously plus 100 NRR now, but it was like 300% or something at some periods. It was massive.
And what's NRR?
Oh, sorry. Net revenue retention. For folks, it is the amount of money basically that you earn from a particular customer, and then how that amount of money changes over time, right? So if your net revenue retention is 80%, that means that you earn $10 from them this year and $8 from them next year. It's not really a great signal. And so if you're up over 100%, usually sign of a strong fit business and a growing customer base. And so Denim started and kind of got their footing with these startup and small brokers. And this was like Moneyball for us, right? And so we would effectively, those who saw the movie, right, you're kind of taking bets on smaller players and players that might be less experienced.
My Billy Bean autographed baseball right over here.
Amazing. So, look at all the Boston connection. This is unbelievable.
Oh yeah, man. Let me tell you. I was just telling someone a story at Little League yesterday. My second riot was in 2004 at Fenway. So the second riot I ever got to participate in was after they won the World Series. And boy, was
nice.
Yeah.
Nice. Yeah. There's there was a period there where we were pretty busy doing a lot of rioting. It was quite nice.
Yeah. As Boston likes to do. Okay, sorry.
We might just riot today. We just might.
Yeah, like we might, who knows?
Next meeting, they'll bring it up. So this was a Moneyball sense for us, right? And so a bunch of these startup and very small brokers joined us because we were effectively the only game in town. So factoring for very small freight brokers was never really a thing. And the reason why is because when the traditional way of factoring for brokerages is you advance. So broker provides an invoice for the factoring company to purchase, right? $2,000. The factoring company says, okay, this invoice looks legit. Here's your $2,000. The broker then needs to take $1,500 and pay the carrier who hauled the freight. That's how it's supposed to work. What had happened in the past is that small brokers would run up huge balances and not pay the carriers. And they would come back around and say, hey, I did this work. You purchased this invoice. Somebody's got to pay me, right? And now all of a sudden, the factoring company gets stuck in this kind of legal situation, trying to figure out who actually has to pay the carrier. The broker disappeared. They're on an island somewhere, whatever. And so startup brokers basically were not, were pariahs in that sense. So they wouldn't be able to get financing. And so we solved that problem with a multi-party payment system where we're extinguishing the lien on the load. We're paying the carriers directly. We're able to then lend and finance and factor unfactorable parties, right? And so that's what helped Denim grow really quickly, really fast in a time where new brokers were getting, their authorities stamped 10 times a day, right? 20 times a day.
Okay. And so you did it in the midst of, as you're describing, like just some of the craziest time in shipping imaginable. And as basic economics will teach us, anytime margins are that high and costs are so high, a bunch of supply comes
rushes in. Yeah.
Rushes in. And so, my understanding is that for quite a while now, we've been in a freight recession. Is that accurate? Ever. Yeah, 10 straight quarters of truck shipment volume decline?
Something to that effect. Honestly, lost track. It's been a long time. It's been a long time. And I think they report new authorities or net changes in authorities on a weekly or monthly basis. And it's sort of been bouncing around even for like the last few reporting periods. So
okay.
I hope that things are of recent kind of turning in the upward direction. I'm sure we'll talk more about that, but it's been we've still grown, right? We did 2x last year, we did 1.5 the year before, 2 year prior, right? So like we're still a growing business in this period, but the oversupply of trucks has been a really hard thing for the market to navigate.
And do you guys just focus on trucking? Do you do anything with like ocean freight?
We don't do anything with ocean freight. It is fleets and freight brokers, and we've done some freight forwarder work here or there, but not the ocean freight invoices. It's a lot of their kind of movement in between.
Okay.
So in our case, we would be factoring the carriers themselves. And I don't think Maersk needs our money. Like that's
Fair enough, right? Yeah. All right. All right. So, I think the main topic that we really wanted to talk to you about is obviously like how terrible the Patriots are and what an awful team.
We're back, man. Like, are
how
you kidding
brutal
me?
it
Did you
is to be
see
a
this?
football
We are
fan.
back.
We'll see. We'll see. And how you have consistently been unable to beat the NFC East in the Super Bowl as an Eagles fan.
This is the year. I'm telling you, we are in it.
No, actually, it's tariffs. So let's talk tariffs. That's the elephant in the room. There's a lot of uncertainty. There's a lot of cost that has been introduced. Let's start. How have they impacted the bottom line for your clients? And what are you hearing from them?
Yeah, I sent a note. Now things have obviously changed. Now, good thing this is a live stream, so there's no lag between what I'm saying right now.
No
and
bleep button. Yeah.
Gonna read this, right? Well, tariffs might change 4 times between now and whenever somebody can see a clip. But
right.
I sent a note to our clients maybe 2 weeks after the really large China tariffs were announced, the 140% or whatever the numbers were. Sent a note to our clients, and it was maybe the second time I've written a dear clients letter as the person who leads that unit for us, and it was basically like, we're begging you, like, please be careful, right? Because we have recourse arrangements with everybody. We're trying to be partners with you in this. We want your help. Like, let's work to keep your balances at a healthy level. Let's keep credit lines at an area that's responsible. And it was I would call it like it was intended to be kind of a warning and a sense of caution. And I sent this out, a few hundred folks, and got a bunch of reply back that was like, thank you, well needed warning, appreciate your thought of it. Like, people were nervous. I think people were nervous. And what we've seen in our and this might be a little too inside baseball, but I'll close the loop, I promise. Yeah. We have seen a relatively steady performance of our business, not up, not down, but like a continuation of what things were before the tariff. And I read the same headlines as everybody else. We're just as in tune as everybody else. The stoppage in Chinese imports coming to the United States, at least from our perspective, was not necessarily a stoppage, but I think it was a lot of maybe rerouting or scheduling or adjustments that I think at first glance looked like a black swan event, and sort of has, at least so far, has not materialized in that way. There are a couple of things that companies do to keep this from to keep things from feeling so immediate, like they have on like they did COVID prior. A couple of things that stuck out. The first one are these things called bonded warehouses, or like the warehousing industry generally has this very favorable treatment of imports on how, when you can bring goods into the United States, and then when you remove them from the warehouse, you need to pay duties associated with that. And so there are ways that you can also route goods. I'm sure many of your listeners have heard this. We can route goods through more favorable countries and be able to kind of turn them and move them through, so that way there's less of an impact on imports there. And so I think when things really hit the fan, it was a lot of how good are your contacts, right? And how good are you able to reroute goods basically around the world, able to get them to where you need them to be. And so for that reason, we have not experienced the same, I think, we haven't seen what materialized where our fears were, months earlier or weeks earlier.
So you've heard warnings of we could have bare shelves in the summer. You're not seeing those kinds of impacts happen.
Not yet. And I say that with some trepidation, because it really does change so fast, right? This is a decisions made in minutes take weeks to materialize and months to correct, right? And so there's a lot of risk still here. I think the fragility of the supply chain was exposed during the coronavirus kind of period, right? We're seeing some. There's also times, I think some are probably aware of this. It's produce season. The famous announcement, sure, Dave, you keep really close eye on this. The announcement of the Vidalia onion harvest is like the big. There's a committee in Georgia that get together, and like this is when the onion can be harvested.
Famous.
It is a famous kickoff in freight, and that's produce season, and it is so a lot of the fruits and vegetables have harvest dates that sort of all follow after the famous Vidalia onion, and so that period has passed, and so we're starting to sort of see our kind of regular uptick, especially in the southeastern part of the country where a lot of the produce is being harvested from.
Here's an interesting markets tidbit. Maybe you know this, I don't know. Most people I don't think know this, but you have futures contracts on all sorts of different agricultural products, right? But there's an actual law against any futures contracts on onions.
Oh, that's interesting.
Yeah. There's a whole story behind it. I don't remember it off the top of my head. I once heard it in Chicago like 20 years ago, 15 years ago.
That's fascinating.
But yeah, there's no onion futures for weird historical and anachronistic reasons. So yes, I mean there is some fame to onions even on Wall Street.
I'm telling you, there's a really big deal. There's like an article that gets posted every year. It's like they announced this release. The like University of Georgia does like the studies of the onion and its readiness and how the harvest was. It's like a whole thing, and it kicks off this like domino effect of trucking, which we really enjoy, right? Because it means a lot of demand for freight.
A bit more quantitative than Punxsutawney Phil, but I don't know why it just reminds me of Punxsutawney.
It's definitely.
I'm gonna get a lot of onion hate mail after this episode.
It seemed like kind of a prank, but it's very real. Having seen my first Vidalia onion season, I was like, this doesn't seem legit, but it very much is. So I mean,
okay. And here's Scott.
Scott
is telling me that in 1955, two onion traders cornered the onion futures market on the CME, and therefore regulatory actions were passed in 1958. And as of today, I think it's like the Onion Futures Act or something remains in effect. No, because that would blow up the Vidalia Onion Committee. They'd have no idea what to do if the onion market was cornered. It'd be
amazing.
Pandemonium. Okay, all right, there. That was a nice little crossover of our worlds. So you talk to a lot of clients, and these clients are really tapped into, I think, the impacts of tariffs. What are you hearing from them? Yeah, and are they happy about this? What's taking place? Do they support it? Do they think that this is a reasonable approach to rebalancing trade, and that trucking will be okay throughout? What are you hearing?
Yeah, I think everybody appreciates the intention of more goods in America. I think that's like a universal thing that everyone is supportive of.
Hard to argue with that. Yeah.
Apple pie and all that. Yeah, exactly.
Right. Yeah.
The things that are creating the most angst amongst our client base is really around the uncertainty. And that kind of continues to be something in supply chain that bears the cost of a lot of these changes, is really the cost of uncertainty, cost of inaction. If you think about how a lot of these large conglomerates and even small, middle market funds and middle market, manufacturers and distributors and stuff, they're trying to figure out placement on ships, on how to reserve space. They're trying to figure out how to, whether or not they're going to get containers this week or this month to be able to fill for the goods. They're trying to lock in rates on trucking and lanes that they want to purchase. And so they are trying to make these decisions to the best of their ability every single day that have, weeks and months impacts that could kill their business, right? If they buy things at the wrong time and the wrong thing happens. And so that level of uncertainty is creating, I think, a lot of short-termism among a lot of the folks that I talk to, where they're maybe spending more time on spot freight and less time on contracted freight. Maybe they're keeping a closer eye on, lighter inventories because they don't want to purchase ahead too far based on demand. So that's the thing that I think is the greatest impact, greatest negative impact so far that we've heard is I think the uncertainty of being able to allocate capital and to make longer term decisions, because that level of stability is required in order for you to want to make a 3-month commitment on trucking.
And we've got this economy that's very dependent on just-in-time, delivery and fulfillment. And does that uncertainty, do you see this sort of direct connection between levels of uncertainty and costs increasing?
Yeah, big time. This is trucking is a very liquid market. And so if you go to any of the large rate data sources, so, FreightWave Sonar is one of them, Green Screens and the load boards like TruckStop and DAT. What you'll see from those folks is a lot of volatility among lane prices on a cost per mile basis that, depending on where you are in the country, can be multiple dollars difference, right? If you're in Atlanta, hopefully you are in Atlanta taking a truck out this week, you could be in a really great spot to be able to make $5 a mile. If you get if you get a particularly sticky situation that you can help bail somebody out on. And in the reverse, if you're in Seattle, or maybe another part of the country that doesn't have as much outbound freight, you might be in a really difficult spot to try and find a paid way home, because nobody wants to take a deadhead anywhere. And how we think about the trucking market is a lot of positioning. A lot of people are trying to make polygons, right? It's like I'm starting and ending, and I want to connect all my lanes together, reduce the amount of deadhead, maximize the amount of freight that I can get at a rate that allows me to pay for my truck and feed my family and hopefully put some money in my pocket for tomorrow.
And okay, so we've talked tariffs, and we'll probably have some more to talk about there. And so, not to jump on an entirely different grenade, but let's talk immigration. My understanding is that the trucking industry has really been impacting, or I should say, could be really impacted by some of these crackdowns on immigration and undocumented immigrants. So is that also something that you guys are seeing?
I think there's been a common, I'm not going to call it a trope, but a common refrain that you hear in the trucking space, that we have this driver shortage, and that's a really big problem for the space. I don't have enough butts in seats, and that's having a lot of this. And I have kind of always been the believer that this is a demand-centric job function. And so if you have reasonable hours and you're well-paying and you treat people with respect, you will find drivers to put butts in seats. And if you're looking to cut costs and you're looking to cut corners and everything that goes along with that, I think you're much likely to find yourself impacted by that sort of situation. There are some new rules recently. I think they're enforcing some different mechanisms to be able to do things like English language proficiencies and things like that. Those have always been laws and regulations that the FMCSA has had on the books. And so I hope that I think a lot of the challenges that I think people see is trying to be able to get around paying a fair wage to people who are trying to make a living that have a large asset on the road. Like, we root for these carriers like everybody else. And I get a really anxious. I think one thing maybe we haven't talked about yet that came through COVID too is the very large influx in fraud and theft that's happening in trucking. And so that, I think, similarly, you see a lot of money go into trucking, and then, a lot of the bad guys kind of can come along with it. I think this is just another form of theft in trucking. If you're taking what could be a well-meaning and earned wage from, someone who is well qualified in this country to be able to do this work. That's the thing that I think about.
Okay. Well, let's talk about that then. Like so you're saying there has been a substantial increase in fraud and theft in trucking. Talk to us
Big
about that.
time.
Well,
Yeah, big time. So the theft comes in many forms. So the thing that I think is the most common is this term called double brokering, where a freight broker will provide a load to a carrier who will turn around, take a cut, and actually give it to somebody else and sort of grab something off the top. And when that sort of situation happens, you get you get a lot of risk in terms of like who's the carrier of record that's supposed to be hauling the load, who is signing and taking custody of it, and then if something gets lost or if the double broker ends up taking the rate that's meant for the carrier and never passes it along, you get things like cargo that's held hostage and people that are looking to get paid. And if you're in the way of that, right? If somebody's got a 30,000 pound truck, right, and somebody's in the way of that can be a really difficult situation. The other thing is you get beyond double brokering is you get just straight up impersonation or people trying to rotate authorities as to avoid things like safety inspections and things like that. Cargo theft has been bad. There are a couple of companies in the space that we really like that are doing really interesting work. Companies like Genlogs, who's a partner of ours, that is doing some really cool work on trying to track down things like stolen cargo. But this, I think there was a group in California that actually just got arrested about this last week. Some sort of organized crime situation. Yeah. So this is like very real, right?
Yeah.
And there's always been things like, write off budgets for things like, damaged goods and theft and things like that. But we've definitely seen an increase in that. I think people across the space have seen an increase in that over the last few years.
Fascinating. And you think that I guess did the issues that COVID introduced and the let's say the massive increase in revenue that sort of came about, was that the thing that pulled people in and there was more to steal, there was more opportunity for fraud?
Yeah, there's I think Craig Fuller, CEO of FreightWaves and Firecrown Media, has always said that freight brokerages used to be this like cottage industry, and I think the value of the freight broker has increased enormously over the years, and so the market for freight brokers has grown substantially, and so as that market has grown, I think a lot of call them pretenders, right, are trying to get into the space and make a buck, whether the right way or the wrong way. And so there's a lot that kind of goes to that. We think a lot about trust and safety at Denim and being able to use our platforms to be able to pay the right people the right amount of money at the right time and drive a lot of transparency and flexibility in how we work with people. And I think the way that we partner with other good actors in the space is a big part of about our identity and what we want to bring to the market.
Okay, flipping back to the question of, is there a driver shortage? Scott, one of our consistent listeners, apparently he even has a CDL, and he's saying it's a pay shortage. There are plenty of drivers.
I like
what you were
Scott's
talking
take.
about before. Yeah,
I like his take. The thing that pisses me off, are we allowed to swear on the show?
you can say whatever the fuck you want.
Yeah.
Yeah, it's all good. Yeah.
Listen, the thing that really pisses me off, because we're all fucking rooting for these guys, right? And you have signs on the doors that say like, no restroom usage. It's like, inhumane treatment of people that are providing what is, the backbone of our economy and providing a essential service, as we've all validated, right, through the last 7 years or so. It's really like, it really makes me upset. It like really makes my fucking stomach turn. And I totally agree with Scott's take. We would love to see drivers paid more.
Yeah. Okay, but so everyone would say that. I think like in theory, people would always be like, of course we want people to be paid more. And it's sort of, it's a consistent theme now with the US and the US political situation is, okay, we want to onshore manufacturing. We want people to make a living wage. But wanting all of these things does drive all of our costs
for
up,
sure,
right? And so
for sure.
I don't, let's. Do you have a sense? This is actually maybe an interesting. Like to to what extent did the increase in shipping rates and costs contribute to the inflationary pulse that we saw? Do you like how much of it was the costs involved, and how much of it
Yeah.
was supply chain disruption and fiscal policy and all the other stuff? And maybe that's a really complicated, difficult question. I don't
Yeah.
know.
No, I don't think they're I don't think you're too far apart there. Here's how I would think about it. When we were in the middle of COVID and the current administration was trying to stabilize the economy, injecting funds in for people, like there was a lot of, I think God love the American consumer. Give them $1, they spend $1.50. That's a great thing for people who are making this out there, right?
Yeah.
And so there was a lot of money being thrown around. A lot of shippers had to eat it, right? Like they didn't exactly. The thing about this was, so we did a I won't go on too much of a tangent, I promise. We do this end of the year recap, and we get some calls from customers. What are you looking forward to next year? Blah, blah. And one of our customers, whom I love, Alec from Alliance Logistics, very sharp, said like, this is the year of carrier revenge. It's like, I love that. I love the aggressiveness of that take, first of all. But like, he's fucking right, because last year they're taking a bath because basically getting eaten to pay for the years prior when they charged every broker and shipper through the nose because they were in demand and there was not enough supply here. And so this is all this giant fucking pendulum, right, that swings back and forth depending on which side that you're on. And there's money to be made there if you're rushing in or rushing out at the right time. And so I think it's all reasonable. The economy is working, whether we like it or not. Like the balances are happening, but it's just not nice sometimes, like, I guess,
So yeah, I mean, it's so funny. I mean, you have seen this swing so violently over the last few years, right? From it's a situation where like nobody was talking about trucking and freight and logistics pre-pandemic. Suddenly it's all we're talking about. Things are through the roof. Now we're all the way back on the other side. Do you think there's like some semblance of sanity coming at some point? Is there an equilibrium that we're going to find?
No. No, I mean, but really, like this is how this industry has worked for decades, right? Like I haven't been in it for that long. I've seen it happen, and there are plenty of wiser people than I who have been in it longer that have seen it come and go at each turn. And maybe it's not breaking news like it is now, but it's definitely worked this way. Like this is how it's always happened. And
so it's a feast or famine industry.
Yeah, for sure. Because like trucking, as much as we love to hate it, is a commodity, right? It's like a soybean that you're trying to hedge on. And I think there's a lot of really smart folks that are trying to run some similar futures and things like that in freight. But like if you're it's like you can only pay so much for an Uber, you can only pay so much to haul a truckload. And I think the same thing applies here.
Okay. All right. Fascinating, man. All right. Let's assume for a moment, we are going to have continued uncertainty and volatility over the next couple of years.
Bold assumption, but okay, I'm following you.
Okay. What do you think that's going to mean? For these firms that are directly involved in the supply chain, and how are you guys helping people to navigate that kind of uncertainty, and how would you help them if it was something that persisted in the long term?
Yeah, I think the things that we're seeing and the things that we're keeping our eye on are people just running leaner, more agile, and higher performing operations. When there's a lot of froth, right, as we were talking about earlier, I think there's a lot more room for people to make mistakes and buck up on rates and, whatever. And I think now you're going to see people really tighten it up. And that's what we've seen over the course of maybe the last few months or so, maybe through the end of Q4, is just like running a way leaner operation, a lot less overhead, trying to keep a better eye on their profitability. Had a couple of our clients basically fire their own customers to be able to get new ones because they just felt like they were in arrangements that they couldn't make pencil out, right? And so something that may have penciled out in the middle of last year is not going to make sense for us this year. And so I think you're going to see people continue to basically cycle through different relationships that are good or bad fits for them. And I think the same thing are going to go for fleets and carriers who are working with brokers who may or may not be paying market rate, depending on what the market is at that given point in time.
Do you think what you just said is generalizable to the industry, or is this just what you're seeing from your clients who are probably a bit more sophisticated and who understand how much efficiency technology can bring?
I think we definitely have the best customers, no doubt about it. I think you're probably right. I think there are people that are more sophisticated that have a really keen eye on staying nimble when there's a lot of volatility and anxiety in the market. I will say, though, for the people that have been around a lot longer, they've seen this game play out a few times. And so maybe they're not as ready to swing their business one way or the other because they've seen the show play out before. But there's a lot of new authorities out there. Like there is not as many, you once a week, twice a week, 3 times a week, you'll see another mid-sized trucking company, right, that goes under for whatever reason. I think there was one maybe last year that had a load stolen of slot machines, and he was like, that was it for me. I didn't have enough cash to cover that, and so we just decided to wind it down afterwards. And so like one really bad situation can create a domino effect of a company that's trying to operate in such a challenged environment like we have right now.
Wow. Any like crazy horror stories that you can share?
So I typically come on shows. You can Google me if you'd like. I typically come on shows when a large broker or shipper closes their doors. And it's typically to help people navigate scenarios where they've got open accounts receivable and they want to figure out how they can still get paid when the companies don't have them on the books, right? And so
your life is horror stories.
I've joked, I was like, I should wear black on more of these shows. It's like the funeral, right? But like those are the scenarios that I think give people the most anxiety. There was like surge transportation was last year. There was the convoy folks. We had one company come to us and say, hey, I'm really interested in factoring, have a working capital gap that we'd like to close. And so we start to get to know the business, start to underwrite, and it wasn't a working capital gap. They were like $1 million short on payments. Like that's not a gap. You're upside down. And so those we see those way too often, right? And so that's the sort of stuff that we beg people to come to us sooner if they're starting to feel behind on payments, because we can help correct, right? If it's 10% of your AR, 15% of your AR, there's workout plans for that. And we can get a business into a healthy position by providing some cover. But 40%, I don't have a bank in the world that I can point you to, and it can't be us, And so I think there's it's not to say it's impossible, and plenty of people buckle down and they, have strong partnerships with their suppliers, and they ask them to just hang for us. We're taking care of you, right? And so that can happen. You can work it out, but it's not a place where we're trying to underwrite risk and where we can get comfortable. So those are the things that I get most anxious about, right? Is when a very cash hungry business model like a freight brokerage ends up having more accounts payable than they have accounts receivable, and it's really hard to climb out of that.
Crazy. Yeah. Okay, so this has been fascinating. Anything that we missed? Maybe I don't even know about trucking. What questions didn't I ask?
I say I never like graduate. I got like a comp sci undergrad, and did strategy consulting, like I'm sure probably many of your listeners did when I got out of school because I didn't really know what to do, and like kind of backed my way into freight, and it's an exciting place to be. Like there's a lot of opportunity here. The space is like as high velocity of change as any other out there. There's a lot of very interesting dynamics to freight that you might not get in other white collar spaces that always create a level of fun and excitement. And so, like, this has been a really fun place to work, and it's been a really fun place to spend my time. And so, for those out there that might be interested in freight and what it takes to win in freight, I would encourage you to take a look because there's no shortage of opportunity here.
Okay, and actually I didn't know you had a CS background. Super interesting, but that reminds me of something I meant to talk about that I forgot. But what about AI? How's AI impacting what you guys do?
This has been, I know we have to talk about it. It's the law by every podcast has to spend like a little bit.
Yeah, if I didn't do it, like they'd kick me out of podcasting.
Right, your license would get revoked. Yeah,
right.
This has been an unbelievable time to be running a software and a fintech company. We are doing a ton in this space. We're running like freight is very paper based, so we're running like document validations, and we're rolled our own auditing solutions. We're looking at things like notice of assignment confirmation using some of these AI tools. We have payment change confirmations. We're running credit checks. We've got phone voice that we're starting to work on. We have got like 7 or 8 parallel tracks of different applications of AI, and we're seeing value today. And we saw value last year, and it is only getting better and getting cheaper. What world is this where you can engage in a technology that's like groundbreaking, and it seems to get cheaper every quarter? It's amazing, and we're having a ton of fun using these tools and empowering our employees to spend a lot of time here, and we're extracting a ton of value from it. So we're super bullish on the outcomes that the value that it can create for the business.
That's good to hear. You hear a lot of people talk about, oh, I thought it was going to be amazing. It doesn't hit my expectations. It doesn't do what people told me it could. We don't see any real benefit or revenue. It's more of like an interesting little sort of tool on the side. But you're seeing it really as a transformational part of your business.
Yeah, first of all, lower your expectations. Okay, that's probably the first thing I would say. The second thing is our CTO, also named Sean. I'm product Sean at Denim. He is real Sean. He has been very sharp about this from the beginning, and so like our data infrastructure was great and ready to receive this, ready to plug and play on these sorts of platforms. Our ability to experiment with different prompt structures and how we have one large prompt and split a bunch of small prompts out and to be able to get us more consistent results has been super helpful. Our sampling has been like our tooling to be able to run sampling and testing on different types of prompts and where we're injecting different variables has been really strong. And so I would say in terms of like the levels, right? Like if you wanted to create a financial plan and a strategy document, you're going to get a generic, you should cut costs and grow revenue. But like if you wanted to do something super low level, like read this document and extract these values from it, like you're going to get some consistent results here you're going to be really happy with. We're starting to look at things like document synthesis and being able to recommend an action based on a set of rules, which we're starting to see some really exciting results with. The next kind of frontier for us is phone and voice, which a lot of logistics and supply chain still runs on the phone. So that's sort of the third frontier for us. We're feeling really good about 1. We're starting to get really comfortable with 2, and we're looking into options for 3. So like stepwise approach to everything. Like you're not going to hit a home run on your first at bat. Like be smart about it like any other kind of tool out there. That's what I would say.
Awesome. All right. Well, this has been a fascinating conversation, Sean. Really appreciate you joining. during the next shipping or economic catastrophe. We'd love to have you back on as
I'll
long as
wear
you dress
my
in black.
black suit.
Yeah,
Yeah, for
please do.
sure.
Yeah, all right. All right.
Thanks, everybody.
Sean
Thanks,
from
Dave.
Denim. Yeah, yeah. Really, thank you for joining. Everyone, thanks for listening. Good to see so many of you. Join us next week on Let's Talk Markets Live. We're going to have our markets team in, Dennis from Stock Market Network and George from Prospero AI, to talk markets and better understand what the first half or almost half of this year has looked like and what we can expect for the rest of it. So join us then, subscribe as always, give us a like, give us a repost, and we will talk to you next week. All right.